So these are transactions for the summary of all the transactions on the particular day for the company Biwheels Company, and we have to begin with the balance shown on the 12th, of January of the year 20x2. So in January, it's a balance carried forward. So all the amount that we write is in dollars. We need to state that. So that was 352,000. That was given from the previous information. I didn't include that here. And then that's 159,200. That was inventory. And then the equipment for the business was 14,000. Not payable, what it was owing the bank, 100,000. And account payable, what's owing creditors, suppliers to the business, was 25,200. And the capital was 400,000. And then going to January 16, so Biwheels, the company, pays 10,000 on the bank loan, so ignore interest. So bank loan, we know that pay 10,000, so the 10,000 goes to the bank, and now the cash there has to be subtracted by 10,000. So you took cash 10,000 from the company to pay the bank, so we say not payable. So this bank loan is part of liability because it owes the bank, so that's 10,000. And then that's it for first transaction. So the second transaction, Lopez, who owns the company, he buys furniture for his home for 5,000 and using his family charge account. So he didn't use anything for the bank or to the bank. So personal effect, nothing. So we don't write anything there. And then we have third transaction. He bought inventory for 50,000, paid half cash, half credit. So open account means credit. So that's open account. So that means credit, half cash. So remember, inventory was 50,000. So that's part of asset. So that's going to be 50,000 there, which is positive. And then paid 25,000, which was half cash. So the remaining will be owing. So that's account payable, means you owe to the creditors. So it's 25. You can see 50 minus 25 is 25. So that's 25,000 for the creditors. And the other thing, that payment to supplier. So supplier payment to supplier. So remember that that's the bank, not payable. Then account payable, that's supplier, which is creditors. So that was 4,000 for Shimano. So that's the company. So subtract 4,000 there. And we also go to the account payable. So we no longer owe that 4,000. We subtract it from the amount that we owe. So that's it. So it's negative on both sides. And then the balance, which is total, we have to add. So we add there. We have 352. So it's 35,000 minus 10,000, and that's minus 10,000 there. And then we come to minus 25,000. So minus 25,000 minus 4,000. So you have to minus 4,000, and that gives us what? 313,000. So that's total for cash, 313,000. That's cash. And then let's add the total for the still on asset for merchandise, which is in inventory. So that's positive there. So inventory, that was 159,200 plus 50,000 worth of inventory is part of asset, which is 209,200. So 209,200. That's the total for the inventory. And we also have another part of the asset, which is store equipment. So the equipment there costs about 14,000. So it's 14,000 for the equipment. So equipment follows under asset because it contributes to making cash for the business. And then let's go to liabilities. So liabilities, we have 100,000 minus 10,000. That gives us 90,000. So that is 90,000 for not payable. You can pause and go through the problem and then continue. So that's not payable. So that's the amount that it owes the bank, 90,000. And let's come to what it owes to creditors. Creditors is 25,000 plus 25,000. 25,200 plus 25,000 minus 4,000 gives us 46,200. So for 6,200 there, that is the amount it owes to the creditors. That's account payable. So Lopez invested 400,000. So 400,000 there, that was the total. No one invested other than that. So that was his own investment. Lopez owns the company, so that was his investment there, which is 400,000, his owner's equity. And we calculate all the assets and all the liabilities, and then calculate all that. We have 313,000, and then plus 209,200, and then plus 14,000. So that gives us 536,200. So it's 536,200. So that follows an asset. So what about all the liabilities and owner's equity? That's 90,000 there, plus 46,200 there, and then plus 400,000 there. Adding that together gives 536,200. So that's that. So it balances. You can see that the total are all the same. The assets are equivalent to the owner's equity and liability. So that's it. So the next thing, we need to prepare balance sheet. So balance sheet, we put all the summaries of the cash, including what they are, and all the liabilities and owner's equity. So cash there, we have to give the name, and then this is the financial statement name, what type of financial statement that, and then the date has to be included on ever that I make a balance sheet. So that's we have cash there, which is 313,000, and then we have in inventory there, merchandise inventory, which is 209,000, 209,200, and then we have store equipment there, that's 14,000. So our store equipment, that's 14,000. So that's our store equipment, carried on from the previous date. So adding that together gives us 313,000, and plus 209,200 plus 14,000 there gives us a total of 536,200. So it's 536,200. And we do the same on the liabilities and owner's equity. So coming to liabilities and owner's equity, we have note payable. Let's go check on our transaction. The sum of notes payable, that's 90,000. That's the amount we owe the bank. So notes payable, that's a promissory agreement, it's 90,000. And then account payable, what you owe the creditors, that's 90,000, plus we have what you owe the creditors, that's 46,200. So account payable, what you owe creditors are suppliers and all that. So we need to find the total liability. So adding that gives us 136,200. So that's the first part, that's not payable. Second part, accounts payable, and then you have the capital, that's Lopez put. So the capital there, that's 400,000. So 400,000. So you're gonna add total liabilities plus the owner's equity. So 90,000. Okay, but that gives us 46,000. So all of that gives us what? It gives us 136. Yeah, we need to have 136,000. That's what we get, and then from there we add 400,000 there. So that and that total liabilities per total capital. Total liability and total owner's equity gives us 436,000. So you can see that the amount is the same, assets and liabilities and owner's equity, which is 436,000. The double bar there, it means that those are the final totals that we have. So that's it. That's our balance sheet, and I hope you can always pause and slow down, up to you. I just made it a bit faster so that it doesn't consume a lot of data, but you can always repeat if you need to understand what I've explained. So thank you so much for watching, and this is your tutor Black Adam, and don't forget to follow or subscribe. Thank you.